Hello. Yes, good afternoon, everybody. I hope you can hear my voice and also see my screen. So today's webinar, we're going to look at a simple strategy, a simple yet very profitable strategy for beginners. So we've done something like this in the past, where we looked at a strategy. We explained it, but most people kept asking me if I could again do another one for beginners. So I mentioned that I have 3 strategies for beginners, but today we're just going to look at just one, and that one is going to be for intraday traders. It's for scalping, not for an entire day trading. So it's for scalping, which means that when the price goes your way for some few pips, you're supposed to step out and take your profit, then go back again after some time, step in, step out after some few pips. We're not holding trades past 1 day or past several hours, just some few minutes and we are out of the trade. So that sort of trading is known as the scalping strategy, where you just enter trades. When you're in money, you step outside. I like this so much because of just one thing. I like this strategy so much because of one thing. You cannot be safe as long as you're in the market. So you're only safe when you're outside of trades, but when you're inside of trades, you are safe, and you may be safe at sometimes, or sometimes safe. But as long as you can see your balance, there is no trade running, just know you're safe. When there is a trade and your balance is either decreasing or increasing, then you're not safe. So that's what I'm saying. Anytime you enter trades and it is in money, which is that is, you are supposed to find ways of getting out of trades that are already winning. So usually most people do like this. I would come here, and then maybe if I was in a buy from this instant, from here, from this point here, maybe I had a buy here, maybe this at this point. When the price has gone against my way, that is, you enter buy. When the price has gone maybe some few pips, we take this stop loss and then put it at break even. And when the price continues to go my way, that is, when the price continues to go upwards, maybe up to that point, we continue to drag that stop loss and follow the price with it. So that way we earn a lot of money compared to if we just have our stop loss fixed here and the take profit may be fixed there or here or somewhere here. So in this case, when you're following price the stop loss, if the price goes our way significantly and quickly, then our stop loss also follows it significantly and quickly. That way we protect a lot and we can save ourselves from unnecessary stepping out of some trades. So what is the strategy itself? That's what most people are asking themselves. What is the strategy itself that you may want to use when you day trade, when you're a scalper, or when you're a beginner trader? So when you're beginning to trade, do not look for anything complicated. That's rule number 1. Do not look for anything that is complicated. Do not complicate your strategy under any condition. Your strategy should be very, very simple and very, very stupid and very, very low risk. So when I say stupid, I don't mean it in the bad way. I just mean that it should be easy, that somebody who thinks they know how to trade should think that it doesn't make sense. That is, it's stupid in a way. But for you, it is useful because it's actually earning you what you want to earn. So we are going to be using indicators that are there by default on MT5 or MT4, and that indicator I already have it on my screen. This is the zigzag indicator. The inputs for this zigzag, the depth is 21, deviation is to 14, and back step is 14. You may want to ask me how I came about those values. These values basically I got them from optimization. I was trying to optimize the strategy, and then I came up, when I did the optimization of the depth, deviation, and step, I found that the correct values, the ones which look a bit better, are 21 as the depth, deviation as 14, and back step also as 14. So those are, if you input those settings, you should be able to see something like this. And since we are doing the intraday trading, we will be trading the 5 minutes time frame. So this 5 minutes, it may look chaotic, it may look like there are a lot of things happening and you don't know exactly where the price is going to go or what's happening, but it's very, very good. Now look at this from this point. From this point, we take this as the swing high, we take this as the swing low, we take this as the swing high, we take this as the swing low, and this as the swing high, this as the swing low, this as the swing high, this as the swing low. So if the current swing high, the immediate previous swing high, is higher than the previous swing high, which is this one, and the low, this swing low, is higher also than the previous swing low, then that means we are in an uptrend. So you're supposed to look for buy positions. And we don't just look for buy position for the sake of it. We wait for highs like this to be broken. That is, when the price now, if we've established that now we're in an uptrend and we have this high here, then the price for some reasons goes and tries to break beyond it, then we pick a buy position from that point. Are we on the same page? So when that happens, that is when we have a high higher than the previous high, a low which is higher than the previous low, and the price now goes above the immediate highest high, then this is usually the correct place to look for a buy from. So the other example is this one, where you can see from this point, we had, this is a low, this is a high, lower than the previous high. This low here is lower than the previous low. This means you're in a downtrend. So when the price goes below this low, you're supposed to pick a sell position. The same thing happens here. We had a high. This high is lower than the previous high, so that means we are in a downtrend. We are now waiting for a break below this low. That has not happened. The same thing has not happened here. So when this happens, that is now this low here is now, this high is lower than the previous high. This high is lower than the previous high, and this low is higher than the previous low. So this is not a very good trend. But from this point to this point, you can see, so this is still the same thing. Now we have a high higher than the previous high, a low which is higher than the previous low, and the price has gone above this high, so we pick a buy. The same thing would happen here. We are still in an uptrend, so the price has gone above, we pick a buy. The same thing would happen here. Has gone above, we pick a high. Then here also we pick a buy. Those are all good trades. Then from this point here, we now have this is a high which is lower than the previous high, and a low which is lower than the previous low. Then we're now waiting for a break below this low. That has not happened. Then we have a high higher than the previous high, a low which is higher than the previous low. So this is an uptrend temporarily, so we expect a break above to look for a buy. That has not happened. Then here we now have a high which is lower than the previous high, then a low which is lower than the previous low. So this is a downtrend. We now want to see a break below this point. That has not happened. So since we are now waiting for a buy, a sell here, it has not matured, so we can't pick it. I hope you see how we've evaded a lot of unnecessary trades here just by confirming the highs and lows. The same thing would happen here. As long as the price keeps forming lower highs and higher lows, that is a downtrend. And as long as the price keeps forming higher highs and higher lows, then that is a very good uptrend. So simply put, if you are trading based on that, you'll avoid several unnecessary trades. That is, you'll find yourself picking trades only where it's necessary. Like, look at this point here. If you trade based on what I'm telling you, your stop loss has like a defined place to put it. That is, when you pick a sell here, your stop loss is usually at the high of this candle here. When you pick a sell there, your stop loss is at the highest high. And when you pick maybe a buy, your stop loss should be here. When you pick a buy, your stop loss is fixed at the low of this candle here. So you can see it's very, very accurate and very, very profitable. So I believe that should make some sense as it is now. And that should be the end of today's analysis. We're going to meet again next week on Wednesday at the same time. Thank you and see you.